Good morning, everybody. How are you doing this morning? Welcome to Tesla Stock News, brought to you by Oregon Cash Flow Pro, helping you maximize your cash flow. My name is James Barber. Today, we're going to talk about why is Nio and Tesla valued so high relative to their other automotive peers. We can throw XPEV in there as well, BYDDY. Those are all up-and-coming companies that have pretty high valuations compared to the number of vehicles that they produce. But specifically, Nio and Tesla kind of lead the pack. I'm going to reach out and we're going to share our friend Gary Black's tweets on some of this subject. I say this often, but if you don't follow him on Twitter, you should. A lot of good information from Gary Black on Twitter, and we're going to share that with you here today. So, Gary says the biggest Tesla myth, ICE-branded EVs launching over the next 18 to 24 months will cause Tesla to lose EV share. ICE brands have been launching EVs for 3 years now. They haven't sold well because they have lower range, less power, limited full self-driving, higher cost, and ICE brand taint. I don't know about the fifth one. I don't know about ICE brand taint. They do have a lot of customers that they've had for lifetimes, for many generations. So I wouldn't say that there's a taint among some people, you know, the folks that are trying to move us to electric vehicles. But number 5 is the only one I would dispute a bit there. But the EVs that the ICE brands are creating, they definitely meet these other 4: lower range, less power, limited full self-driving, and higher cost. That's definitely an issue. And then he goes on to say, at $856, Tesla trades at 82 times 2020-22 earnings per share of $10.40 versus 2021 to 2025 volume and EPS growth of 55% and 57% respectively. That's 1.5 times PEG versus R1000G at 1.8 times PEG. Not exactly sure what those mean. Not really that important when it comes to this discussion today, but if you know what it means, good on you. And he also provides a graph, which I'm not going to get into that because it's just a wall of numbers. Most of you are not going to understand it. I didn't dig into it in order to explain it to you, and we just don't have the time this morning. So he goes on to say, on 2025 EPS of $29 at a modest 50 times PE, Tesla 2025 value is $14.50, worth $1,000 today at a 9.7% discount rate. His 6 to 12 month price target for Tesla is $1,000. Now Gary, if you haven't noticed, he used to be an analyst, so he knows what he is talking about, more so than a lot of other analysts who basically don't really dig into this sector. They try and use their traditional value company knowledge and valuations and apply it to a growth company. Happens all the time. That's why you see so many be wrong on Tesla. Gary, on the other hand, has been nearly spot on when it comes to Tesla valuations. So really good follow. He goes on to say, the best Tesla analogy, Apple iPhone, which created the smartphone category when it launched in 2007. In response to iPhone's success, legacy players Nokia, BlackBerry, Motorola all launched their own smartphones. All were inferior to iPhone, and they never got off the ground. A lot of good points there. Now, I wanted to talk about Nio and Tesla because I see Nio as a challenger in this space that's creating a niche that can also serve a purpose. I kind of see Nio and XPEV as similar to maybe Samsung versus Apple. Apple dominates the sector. Samsung has a very popular product. Okay, there's room for multiple winners in this area. And more Gary here. No growth PM would value Tesla on trailing or current year's PE. It doesn't make sense economically, given the huge growth runway with EV adoption at just 3% today. It's going to be going to 24% by 2025. Tesla total addressable market soaring as the Model Y goes global and Cybertruck launches in 2021. India is also the new total addressable market catalyst. You've got a huge population base there. So total addressable market is indicative of your overall customer base and how big it can grow. How much can you actually sell if your total addressable market is a very small niche product? You're not going to become a $1 trillion company if your total addressable market is a very, very tiny percent of a sector. The more you expand that, the greater the likelihood that you're going to succeed and you're going to continue to grow your customer base year after year after year, which Tesla is trying to do in an exponential fashion. Now, beyond, Gary doesn't even mention Model 2, Tesla Model 2. That also is going to expand the TAM. But let's see what he says here. He says, meanwhile, Tesla total addressable market expansion has led to Tesla gaining, not losing, electric vehicle market share. In the US, Tesla TAM expanded from 25% to 66% with Model Y launch. Model Y going global in 2021 will lead to further TAM expansion. The Cybertruck launch will cause Tesla USA TAM to expand from 66% to 84%. That is a huge market. You throw Model 2 in there, and now we get up in the 95+% range. Now, Model 2, the total addressable market expansion, we're going to see a greater expansion with Model 2 worldwide when we get to Europe and China. That's where basically all of their vehicles, or the majority of their vehicles, tend to be a lot smaller economical vehicles, ones that can fit in their very narrow roads and work well with very dense populations. The Cybertruck is not that vehicle. It probably will not even be able to be driven in many of those places by most people. And let's see, he finishes up, he gives us a graph of the market share for each vehicle type. So pretty interesting information there. Beyond, okay, we got 11 minutes till market opens. Beyond market share, EVs, how they're competing and how they have the potential to grow that EV market share, Tesla and Nio in particular, it's all about the branding. So the reason that those two can demand such high multiples is they have rabid fan bases. Some people call them cults. Nio's is growing. I think the Tesla folks, people who really pay attention to Tesla and over the years have spent their time learning about Tesla, they see the potential in Nio. So a lot of, and XPEV, but I think more so Nio. A lot of that fan base that Tesla has built in is translating over to the market with Nio. And Nio is a lot more affordable. So people that can't get into Tesla tend to get into Nio. Now, if you go to China, Nio has these massive service centers or dealerships that basically provide a community space for their clients, for their customers. And they're creating this overall brand that makes it a Nio lifestyle. They sell very high-priced SUVs. Their new sedan that's coming out is going to be competing with the Model S, not the Model 3, not the Model 2, potential Model 2 coming up. So Nio is creating this brand. They have their own app. They have their own social media place where people can gather and talk. And when a business does this, it allows them to continually pitch their product or their other things. They have a clothing line. So, I mean, Nio, I love where Nio is going as far as creating this brand that people are going to identify with. And this is going to be their niche. This is how they grow their niche. You've got the people that are going to be exposed to that are going to want to own the shares. And then, of course, it's in the biggest EV market. And they will have the ability to export from there as well at some point. So, while they don't produce a whole lot of vehicles, they do have a very high price on their share relative to that because people can see the potential. And you have a lot of people who just believe in it and want to own the product. They want to own the stock. So that's my pitch. That's why I say Tesla and Nio both demand a higher price in the marketplace, because there's rabid fan bases that are willing to share the business model and share the company and also share its vision. And you can't pay for that type of marketing. I mean, it's something that you can try to foster and grow and create an environment. And the companies that try to do that, not all of them can be successful, but these two have been successful. I look to see them be successful moving on into the future. So let's check out Tesla. Tesla's finished the day yesterday at 849. It's been up and down in the pre-market. We are at 855 currently. And what is going to happen today, Wednesday? Let's step over to the stock market watch. Take a look at what I have up here. I drew a few lines over here. This is our daily chart. We've got a couple of new trends. You can see these red lines, a couple of new trends coming in. And we've got stochastic pointing down, but it is in the overbought territory. RSI coming up, so we have a little bit of divergence here. MACD is in the positive. So we could do a couple of things here. We could go up, or we could go down, or we could go sideways. If we go slightly down to sideways, it looks like maybe we end up with 848 or so, 840, between 840 and 850 for the day, where we end up. If we go down, we could come down to back down to the 820 range. That's this support line here. And our other resistance line is right up here at 860. 860 has been really strong resistance. On our upper trend line here, we get all the way back up to this 848, which is going to be the highest resistance we've seen. 884. Sorry, 884. So those are the options that I see just based on my meager charting skills. We'll see what you guys think. Let me know what you think. Good morning, everyone.
Now go maximize your cash flow.